Bank's profit for the first half of this year went up by about 15.5% to 1.9 billion cedis. That's according to the latest banking sector report. However, the income is lower than 36.3% growth registered during the same period last year. Here is a Business Desk report.
According to the latest banking sector report, the decline in profit levels was due mainly to sharp increases in the three cost elements. The central bank, however, said the industry remained sufficiently profitable during the first half of 2020, although increases in interest expenses, operational costs, and high loan loss provisions constrained profitability growth. Growth in net interest income also marginally declined to 16.5% in the first 6 months of this year. This is attributed to a much higher increase in interest expenses on the back of increased term deposits and relatively more expensive borrowing. This is attributed to a much higher increase in interest expenses on the back of increased term deposits and relatively more expensive borrowings. Interest income, on the other hand, grew by 13.7%, a much lower incremental change than the 9.4% a year ago. This partially offset the increase in interest expenses. However, despite the slowdown in credit growth during the period which affected interest income from loans, increases in investments sustained the overall interest income of banks. Also, net fees and commissions grew strongly at 10.3% from 3.7% over the period, due partly to more usage of electronic banking products and services in the wake of the COVID-19 pandemic. Operating expenses also shot up by 12.9% during the first half of 2020 from 7.6% a year ago. This was due to the sharp 17.3% increase in banks' other operational costs, attributed largely to costs associated with the safety protocols and containment measures of COVID-19, as well as activation of business continuity plans during the period.